Kitco Mining's special coverage of the Precious Metals Summit in Zurich is brought to you by Vizsla Copper.
How'd you get over a hostile takeover? Go shopping, of course. This is Paul Harris for Kitco Mining at the Precious Metals Summit in Zurich in Switzerland. Joining me this morning is Fred Bell, CEO of Elemental Altus Royalties. Good morning, Fred. Welcome to Kitco.
Morning, Paul.
Now, I imagine 2023 has had to have been a somewhat calmer year for you than last year when you had to fend off a hostile takeover. Apart from getting some sleep, what have been some of the highlights for you this year?
Well, I think it's been a very busy year because we merged with Altus Strategies in August 2022. We refinanced our credit facility in December, and really in 2023 to date, we've made, I think, 5 royalty acquisitions, and we've also had 3 transactions on our royalty generation portfolio. So slightly calmer, but it's certainly been busy on the transaction front.
Well, I did say calmer, not less busy, and it sounds like you've been really, really busy. But just taking a quick step back to the hostile takeover that you had to deal with. The dust has settled now. That's now in the past. It's in the rearview mirror. What have you learned from all that, or what did you learn from all of that?
I think that we stuck with the strategy that we had at the time, which was really with the merger with Altus Strategies. It brought a lot of revenue generating assets to the portfolio, and we had a sort of threshold in mind and a target that we wanted to reach in terms of revenue in the portfolio. And I think that at that time, that was a transaction that made the most sense for us. And really, if you look at us today, 2022 was a record year in terms of revenue. We're expecting 2023 will be a record year of revenue, and we haven't put out guidance for 2024 yet, but we've got some really good organic growth in our portfolio on that revenue front. And if we look at the market today, I think cash is king, and having that really solid, diversified revenue base it puts us in a very strong position.
I want to get to the sort of cash and king aspect in a moment, Fred, but in addition to acquiring assets this year, you've also been divesting as well, which I think in some ways for a royalty stream company is actually quite a rare thing.
Yes, and this comes from Altus's, I think, history and legacy as a preeminent royalty generator in Africa. And so we had a lot of assets in Morocco, in Egypt, where we were the 4th largest landholder after Barrick B2 and Centamin, in Mali and in Ethiopia. And we've announced over the last year or so, we have put the Moroccan assets into a London listed company, Ethereum. We have announced a deal in Egypt with the assets going into a private company, Into. We announced, and we actually closed just very recently, a deal with Allied Gold in Mali, where they're going to take our advanced project there, and they're saying put it into production at their adjacent Sadiola mine in H1 of next year. And in Ethiopia, we've got another partner who's very well experienced, great track record. So what we've been able to do is really, I think, realize latent value in our portfolio on the royalty generation side. And when you're talking about market conditions in this market, people often, when you have 80 assets in your portfolio, people don't go through in that level of detail and granular detail, and you don't always get the see-through value. And so for us, being able to demonstrate some of the latent value in the portfolio through those transactions, and one of those projects is going to become, start mining in H1 of 2024. Some of those projects in Egypt, we're hoping our partner will be drilling very shortly on them. In Ethiopia, they're already on the ground doing work. So we're now going to see an increase in exploration and activity across those projects by partnering them and outsourcing them with good quality counterparties.
So again, that's coming back to the cash is king, getting someone else to spend money that you get a benefit from.
Yes.
Okay, let's broaden the cash is king concept. A lot, you're a maturing royalty streaming company. A lot of royalty companies pay dividends. I imagine this is perhaps a topic that's come up in your boardroom at some point. Should you pay dividends? If so, under what conditions, what amount, that kind of thing? What would be meaningful? How have those conversations gone?
It's a good question, and it's one that, as every year to date, has been a record year in terms of revenue growth. It's a question that is, I think it's a more accurate time to talk about it as you start to have that increasing margin. And so going into 2024, which we expect will be a record year, I think we will, that is probably the first time we really started internally looking at that and talking about it. we also want to weigh it against the opportunities in the market. And I think today, and we're seeing, and by virtue of, we've done 8 deals so far this year, we are seeing a lot of deal flow, and we're seeing a lot of opportunities. And I think for us, we feel that the time to be aggressive in the market is now, when actually there are good opportunities out there, and there are less in the sub-billion-dollar royalty space. There's 8 less royalty companies than there were 18 months ago. So there's less competition. The market conditions are actually more conducive to putting royalties and streams in place. So it's always a trade-off internally between the amount of the cash we have and the opportunities that we see. But it is a topic that will probably be on the agenda going forwards.
Now, this may be a little bit controversial, but when you look at the royalties paid by the dividends paid by the royalty streaming companies, the yields aren't very good because the share prices are so very strong. So in that scenario, why bother?
It's in a world where you can get 4 to 5% interest rates in your bank account, and in some countries you can get 8% or more. It's a good question where a dividend can be meaningful. I think for us, where it would be meaningful is that it would represent the start of a journey and not the end point. So if we put a dividend in, I think we would put a dividend that we would want to grow over time, and we're very comfortable that it's sustainable. So I think that factors into the conversation as well, is what is a meaningful level today in the context of current interest rates environments where the banks are now paying you to have your money in the bank, which is a rare thing in the last years.
Well, as you say, cash is king, and having cash on your balance sheet gives you the opportunity to do things as and when and if those opportunities arrive, which if you dividend out that money, you don't have that opportunity anymore.
Yeah, and look, we've put a lot of focus on building our revenue base and making it as, I think, resilient as possible. And that's through diversification, it's through good quality operators, and it's also through now increasing that revenue and giving ourselves a bigger margin. And so really for us, having that free cash flow base where we're generating revenue that we can put into opportunities, we can put into new assets, or we can use for things like a dividend. It's how we've built the company. And I think in this market, it stands as well.
You mentioned that there's 8 fewer royalty streaming companies today than there were a year ago. What other broad trends do you see in the space?
I think that the theme of consolidation will probably continue going into 2024. So I think there will probably be some more transactions at the corporate level, and that can be private portfolios, private companies, it can be public ones. I expect that will probably continue going into 2024. I think there is, we saw a sort of a peak of royalty companies in 2020, and that has come off. And it's come off as there's been consolidation, and some of the major senior royalty companies trade at very high valuations, and M&A can make sense. But also, I think if you're a pre-production, pre-revenue royalty company, it can still be difficult because you need to raise money. So I think that's been a trend that's continued. One interesting aspect to see will be if there are more thematic royalty companies, so commodity specific, uranium, like lithium, etc. So that might be, to some extent, Deterra is really an iron ore royalty company. So there are a few.
Did you say Deterra?
No, Deterra are an iron ore royalty company in mining area C. So I think that that will be an interesting trend, probably not over the next 6 months, but over the coming years, to see if the emergence of single commodity focused outside of the precious space royalty companies, if that becomes increasing as well.
It would seem to be a bit of a bold strategy. But that said, I guess your comments there on a sort of structural level, but what about a specific deal size or deal type? Are you seeing any sort of other trends there?
I think it's generally been the case for a few years now that the large transactions, call it the tier 1 transactions, remain very competitive. And that's because of the very strong free cash flow generation from the major royalty companies. And basically, I think that means that for the top assets, that often those sales are still pretty competitive with the major royalty companies looking for growth and having available cash. I think that where we almost see a fractured market, and this is representative of the fact that the top 5 royalty companies make up 90% of the market cap of the space. So what can happen is if you go in the, call it the $2 to $20 million or the $2 to $50 million space, I think there's quite a big gap there because there are far less players who are able to do those opportunities or for whom they are meaningful in terms of moving the needle. And so there are more opportunities in that space than there are in the $200 million to $500 million space.
So your Francos and your Whedons don't get out of bed for less than 20 million? Or...
I think it's they can, but it's the opportunity cost is high for them if there are larger transactions. And I think in this kind of market, there are larger transactions starting to come back. And so what that generally means is that the larger royalty companies focus more on those, and that leaves a bigger playing field for companies like us.
Now, the gold equities, the non-producing gold equities particularly, the share prices are in the doldrums. Most juniors are desperate for cash. You must be inundated by financing opportunities at the moment. How do you pass through those and determine with whom to deploy your capital?
It's a really good question, because I think one of the biggest challenges at the moment is actually the amount of deal flow we're seeing. And that's a very good positive. It's a good problem to have, but we are seeing a huge number of opportunities. And part of that is experience, and having been in the royalty space now for years, is we've actually looked at hundreds of opportunities already. And so sometimes we're seeing a project that we saw 2 years ago, and we can see what we thought 2 years ago and how it's tracked. We've also built out our technical team, which we're continuing to do as we get bigger and we get a stronger in-house team. And we're very fortunate through one or two of our large shareholders, La Mancha in particular, who have 30% plus of the company. We're able to leverage off some of the skills in their team and that contact base. So I think really technical team, network, and IP. And people often don't value the intangibles like IP. But once you've been in the space for a long time, you see a lot of the same opportunities that you've seen before, and you get to know the management teams better and the history of the assets. And so I think that helps us filter through the opportunities that we see.
Now, for a young company, Elemental Altus over the last couple of years has done a lot and has been through a lot. What's next for the company coming up in 2024?
I think we were pretty excited going into this year. It should be a record year in terms of revenue. We've done a lot of transactions. We've had some really meaningful additions to the portfolio. We bought a royalty on Arizona Sonoran's Cactus project in the US, and for us, that's going to be a long life copper asset in the future. We've had some good exploration news across our portfolio. And I think for us, continuing to build out the portfolio in an accretive manner for shareholders. And management and the board still have over 10% of the company. So we are very meaningful shareholders in this company. And I think for us, being in a position where we actually have positive cash flow, we can go out and do deals independent of the market. And we have, I think in our last financials, approximately 10 million in the bank. And we have credit facilities from the major banks that we can draw on. All of those are attributes we did not have 3 years ago. And so we are in a far, far better place to transact on the opportunities we see, and we're seeing more of them than we ever have.
Well, I wish you continued success, Fred, and thank you very much for joining us today.
Thank you, Paul.
This is Paul Harris for Kitco Mining at the Precious Metals Summit in Zurich. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Precious Metals Summit in Zurich is brought to you by Vizsla Copper.